the big thing that correlates to crypto markets overall is some definition of liquidity. And you can use M2, global M2 year on year. That looks pretty much like Bitcoin year on year or crypto market cap year on year. We're at the very bottom. It usually turns around at this point because eventually the outcome is central banks have to provide liquidity in a recession because there's no liquidity. So forward-looking assets like crypto are picking it up. So they also have perfectly correlated to the turning point in the inflation cycle. So they kind of time the bottom, and I think it's time the top. So basically, I think crypto is saying, okay, inflation has now peaked, and therefore the marginal pressure from tight liquidity is gone. So my view is with, let's give it a probability, 70% probability. So that's pretty high conviction that the low is in. I've got as clear a view as I could possibly have. Nothing is a certainty, but for me, the macro is rolling over. By that, I mean, we're going into recession. We should see the things like the ISM survey and other things start falling apart pretty quickly. The forward-looking elements are falling apart already. We're seeing it globally. So that's growth evaporating. Alongside that, the narrative hasn't caught up. Most commodities are down between 30 and 50%. Oil is the last to crack, and I've been talking about this on Twitter and been writing about it for a period of time, is everyone's long and expecting oil to go to $200. I think there's a washout coming and it goes down to 60. So that's the last inflation story. Everything else from the raw goods then comes into the supply chain and then eventually starts fading. So we're going to see that inventories, because people build massive inventories after COVID. Those inventories are now unsold because of the economy slowing down and inflation eating disposable income. So we've seen it from Walmart, Amazon, and others. They're going to start discounting inventories to try and shift it. People are laying off staff. So the macro cycle is going to get to the ugly phase. Okay, why is that making Raoul bullish? Well, because the outcome to that is as inflation comes down and bond yields fall, liquidity conditions improve. And what drives financial markets at the macro level the most is liquidity conditions. We've just gone through the largest tightening in financial market history because the rate of change of interest rates going up was the fastest ever. Mortgages are back to where they were in 1996, and shocking. Then the dollar went up at a rapid clip, which is a tightening of financial conditions. And then commodity prices went up. So basically, everybody's suddenly skint, as an Englishman would say. Nobody's got any money, and the economy implodes. So the forward-looking indicators suggest to me that this goes off a cliff fast until we probably bottom Fed March next year. That's the economy. Now, forward-looking assets' job is to look forward. So one of the reasons crypto, digital assets, went down was because discretionary spending came out of the market. So if you think of the legions of dollar cost average retail investors and just think of their rent or mortgage payments went up, their shopping bills went up. So suddenly, or if they were foreigners, the dollar went up. So suddenly, how the hell can they buy as much dollar cost average in crypto? They don't. So they stop. So what happens is you've removed a huge amount of buying power. So as these conditions change, that changes. Also, the other big players in the space now, the hedge funds, the crypto, the macro funds, and then the institutions, well, they're also a function of liquidity. So when liquidity is more available and cheaper for them, they can apply more leverage essentially in their portfolios. My view is with, let's give it a probability, 70% probability. So that's pretty high conviction that the low is in. And therefore we're starting the upside cycle. So the macro, I think for me, even though everyone thinks, oh my God, it's terrible, the equities are going to sell off. Well, the equity side of the equation, that correlation with equities was actually a correlation to liquidity. They're all actually correlated to the macro cycle. Can equities sell off further? Yes. Can crypto decouple? Yes, we saw that in March 2020, that crypto started going up when equities were going down because crypto is more forward-looking. However, equities have actually priced in quite a lot already. So it's not 100% clear whether equities need to go down or not. So I did a Twitter poll recently with like 20,000 people responded, which was, do you think equity markets have further to fall? 70% of people thought so. And I said, are you underweight where you typically would be or in line? And 70% of people are underweight. Well, if 70% of people think the market's going to fall and 70% are underweight anyway, who's left to sell?
Sure. Yep.
So that's, and it was the same with crypto.